Hi guys, welcome to today's market review. This is an additional for Trendonomics Partners Limited. Today, hi guys, welcome to today's market review. Today, 9th November 2020. I am additional, the managing partner for Trendonomics Partners Limited and the co-founder of TLPSR.com. Today we'll be looking at an interesting market during a market review, and there are a lot of interesting market activities today that resulted to a lot high market volatility. And we're going to do a brief review of the market, have an idea of what happened, what are the likely trade setup that we may see going forward in the trading week, and I believe this will give us a better insight into how to interact and behave in the market. First off, as it's my tradition, I would like to give you some basic norms which I do follow in the market, which I would also like to share with you. First off, note, trading is a marathon or a sprint. It's not a day journey. It's a journey for years. So we have to be patient, patience is a virtue on the market. So we have to learn to be patient in the market. I see a lot of volatility today during the day, and I noticed you could be tempted to want to enter the position. But like I posted in a WhatsApp group, it's better to be patient, wait for the market to make up the mind, then have a high probability trade setup, which gives you higher likelihood of succeeding in the markets. So now I will be sharing with you some insights and some thoughts about the market. Today, we saw a lot of movement in the market. We saw a lot of activity, a lot of swings in the market across various peers. And let me share with you some of this thing. I'll share with you some of them, and would have a better understanding of what to do in the market when the market going forward from tomorrow and the rest of the week. For those that are joining us, I've given a brief introduction of what some of my quotes and what we're likely to see in the market this day, but I will actually have to run them through. For those joining us, let me just give you these three key quotations. One, the market makes up its mind, it does what it wants to do. So you don't determine the direction of the market, let the market determine the direction. The second is this: trading is a marathon and not a sprint. And the third one is patience is a virtue in the market. And like I said earlier on, today we saw high market volatility, and it gave us a lot of insight, ideas into what to expect. So what I'll be sharing with you today now is my approach is to look at the market from a top-down approach. First, we're looking at the broad index. My style of trading is very simple. I'm an intraday trader, a position trader, and what I love to hold positions for days. I love the market to make up its mind, to give me the direction I should go, and I would want to trade in that direction, because research has shown that most profitable traders in the market are intraday traders, they are position traders. So I tend to stick to it. I've gone through swing, scalping approach, but I ended up on position trading over the years, and it has been worthwhile. So let's dive into the market. We have some few minutes, and let's dive into the market before I open the floor for questions. First off, the first thing I do every trading day, by the end of every trading day, the market is going to close by 11 o'clock Nigerian time. So the first thing I try to do every trading day is to look at the dollar index. First, I want to have an idea of what the dollar is doing. What is the index doing across board? And that gives me an insight into what pairs I should look at and what direction my bias should be formed and what I should be expecting. Like I said, by 11, we would have a true picture of the end of the day of what the dollar index is going to do. But the dollar index is a basket, is the index that reflects what dollar is doing across 7 major currencies. It gives us an idea of what to expect. Now, this is dollar index. Today, we are seeing that the dollar index currently, at the moment, is forming what they call a bullish engulf pattern. I would have loved to have this by 11 o'clock Nigerian time, but because of our time and my likely schedule, so I prefer to want to do it now. So the dollar index currently is forming a bullish engulf pattern. Obviously, you're seeing that the buyers are more. There's a positive bias for dollar today, and that is why we see the dollar rise against some major currency pairs. Now, this is today shows we're having a bullish bias today. But let's have a proper perspective, which we call having a frame of reference. A frame of reference is putting this index on a frame to understand where the dollar is trading. So it gives us an idea of what to look at subsequently. So in order to have a frame, the next thing I do is I try to draw my resistance and support line. I'm going to run you briefly through my approach to analyzing the market, but I want to have a top-down approach and give you my criteria, my trade setup criteria. So first off, I'm drawing my resistance and support line. See my resistance and support line, I have an understanding of what the dollar is doing at the moment. Then I can now use that to define my trend. Let's have a bigger, broader picture. You would notice the dollar is trended down from this uptrend about 102.05. Find a bit of support, ranged a bit before picking up the downward direction, add a bit of correction, then eventually broke through this support, then down to this support. And you will notice that the dollar pulled back a bit up, came to the same support for the second time, went to this support that was broken, that was breached, and now serving as resistance. Again, add a downward movement. But there's an interesting thing here. So by the moment it had a downward movement to resumption of the trend at this resistance, it didn't head down to the support, but instead we saw it rally to form an eye, which did not also get to the resistance here and back to the support. So imperatively, what we're having is the dollar is trading within a long-term range. Because I'm using the daily time frame from analysis, that's what I do. I use my daily time frame for analysis to form my bias, then I scale down to a lower time frame to determine my entry, to time my entry. So in natural fact, what we are seeing is dollar index trading within the range. So now currently the dollar index has gone back to this same support level for the third time. So this is the first time, the second time, and the third time. And the rule is this: buy at support, sell at resistance. And currently today, we are seeing the dollar index forming a bullish engulf pattern, covering previous day candle. That was on Friday. So in actual fact, what it's telling me is we will continue to see the dollar trading within the range, but this level, which is at 92.70, forms a buying zone where the buyers are trooping into the market. Whether it will get back to this resistance now, to this support now resistant, I don't know, time will tell. Whether it will reverse back, time will tell. But the current movement is saying that we are having the buyers coming into the market as today. So we understand that the dollar is rising, is gaining against major peers, some major peers. So I have an idea of what to do. I have a bullish bias for the dollar, which means any other pair or instrument traded against the dollar, paired against the dollar, I'm expecting it to decline. Now, there's a fundamental reason why we saw the dollar tends to rise today. The COVID-19 vaccine test that was out, they had a positive result towards COVID-19 vaccine. So for all those fundamentals, it tells us that we are likely going to see a bit of appreciation in dollar. So this has given us a pointer that this level 3 is likely to be the new accumulation point for the dollar. Now, having formed a bias on the dollar, we are bullish on the dollar. So the next thing is let's look at individual pairs to give us a better entry. So you may decide to trade the dollar index. I think it's a good thing if you decide to trade the dollar index. I can decide to say, okay, I want to go long on the dollar. Let my stop loss be placed below the support. And by the end of today, I would rather wait till 11 o'clock. Take my buy. I don't like going down to a lower time frame to try to time my entry. I love intraday, so I take my buy. Yes, there will be higher pips from the entry to the stop. Yes, I agree, but I love to let the market make up the mind, stay there, run it through for days and enjoy myself. So I could take my buy and identify some major support and resistance. Now, the immediate will be around here. Take my buy, target this first level and second level, then the third level, then before I decide what to do. But like we know, we are not always right in the market. We don't need to be 100% right in the market. The market makes us in mind. It could be tomorrow. Tomorrow we could see the market tends to reverse and break this support. So I would protect myself by placing my stop loss below the support of 92.11. Now, having had a bullish bias on the dollar, I think I've given one trade setup. I would now go to some individual currency pairs. Let's check out two of my favorite currency pairs or instruments that I trade. Now, my first favorite is gold. I'm a key lover of gold. I love gold. Now, remember I said dollar is gaining against all instruments paired that are paired against it. So today we saw heavy. When I say heavy, I mean higher decline in gold, about 1,000 points plus in gold today. This is interesting, and all of this happened within 4 hours. So this is what interests me, or this is what will interest me going forward. So I have to wait. I don't want to rush it. I just want to wait. First off, this is a strong bearish candle that covers at least so many trading days. So dollar says up, with what I'm saying in gold down. But
sorry, good evening.
Yeah,
good evening, sir. Sorry.
Good evening, Mr. Kennedy. Just hold on, please.
Oh.
In about 20 minutes, you will join us. I would unmute where we can ask questions. So I just want to give you one or two rundown on two different currency pairs, and I'll open the floor for questions. Our comments and submissions. So now we're having have this bearish candle, strong bearish candle, covering so many trading days. But there's an interesting thing here that I drew before now on gold. I had this trend line, upward sloping trend line, because I'm looking for a breakout below this trend line. So according to the way I trade, there are three things I do. First off, I determine my trend. I want to know whether we're in an uptrend, downtrend, or in a range. The second thing I try to do is identify my key levels. When I mean my key levels, my key supports and resistance levels. I could use historical levels, or I could use Fibonacci levels. I could use trend line. Then I try to find patterns around these levels that would help me to trigger my entry or my exit. So I try to find patterns around that would trigger my entry or my exit. Then I come up with my full setup. So let's look at this. Gold at the moment is trading a larger uptrend. On the bigger picture, gold is trading in larger uptrend. But we have seen a correction. We have seen series of corrections to the 50% Fibonacci level of this new upward wave. So every time it gets to this 50% Fibonacci level, we see it pick up back. So every time it gets to this 50% Fibonacci level, the buyers tends to come back. We tend to see accumulation in gold. Now, it's a critical support level. On Thursday last week, we saw gold breach this intermediate resistance point. It gave us a breakout. So I waited on Friday to see what is going to form, and I saw a doji, a spin it up, small body, shadow up shadow, upward shadow, and downward shadow. So I said, okay, let me hold on and see what today would look like before I could make my decision. And today, we've seen a complete reversal to the downside. A complete reversal to the downside. Now, this tells me that the breakout we saw on Thursday last week could be a false breakout. So the breakout could be a false breakout, and we may see a resumption in a downtrend. So what am I expecting to do going forward tomorrow? Or what am I expecting today? I drew a trend line, this upward sloping trend line, to see whether today's downward bearish movement will breach the trend line, but it did not. Instead, it tested it. Remember, we are in a longer term uptrend. We find correction at 50% Fibonacci. Every time it gets to 50%, there's always a bullish accumulation. There is always a buy, or the buyers tends to come in to accumulate. We are back to this 50 again. So, but remember, earlier on I said the dollar index is likely to push up. We will likely see an uptrend in the dollar index. So what am I expecting? I'm expecting gold to continue the downtrend. We've seen a pattern, broke through this intermediate resistance, and likely back to this support, major support. So what do I do? What do I do? What would I do? What I would do is this. For tomorrow on the 10th of November, I'm going to place a pending order, a sell pending order. I'm going to place a pending order, a sell pending order below 1864. I'm trying to mute someone, please. So I'm going to place a pending order below 1864. Could be something like 186429. And the first thing I will do is this. I will target 182460, which is my next major, which is my next support level using Fibonacci. And also there's an historical resistance, which is likely also to become a support. So I'm going to look at crypto and the effect of it today. So we're going to look at what happens. So I'm going to take the gold, the commodity. I'm going to go to a bit of one or two currency pair. Then I'm going to take a cryptocurrency. Basically, the popular one, which is Bitcoin. So looking at, let me quickly flip on gold and complete the gold. Now, I'm going to take my pending order. Because I'm an intraday trader, I prefer to do that instead of me scaling down to 1 hour, 4 hours. Yes, I could do that, but I prefer to stick to this because it has worked over time. And place my stop loss a little bit above 1872, possibly 1875. My first take profit will be at 1824.60. or 1824.70 or 1825. A breakout of this 1824 means that we are likely going to see gold going to come here, get to 1765. On the other hand, if by tomorrow we see gold back up again, then it tells us that this support level holds. But remember, our buyers on gold dollar says we are likely going to see a continued upward movement in the dollar. So every instrument paired against the dollar are likely to depreciate in value. So gold is likely to be one. And remember, the reason for the rise or for the sharp appreciation in gold over the past months was because of the COVID-19, the pandemic, flight to safety. So we may likely see gold trend down. So that's for gold. Let's take another one, quickly take another one. The euro US dollar is another favorite pair. My criteria is very simple. My criteria is very, very simple. I love simplicity in trading. I've spent so many years as a trader. I've used so many indicators, but I realized that it's better to simplify the process. Don't just overcomplicate it. Overcomplicating the process can lead to analysis paralysis. So the second pair instrument I'm going to look at is Euro USD. 4 criteria. Always remember this. I check this every day. I determine the trend. I find my key levels, that is support and resistance. I try to find patterns around support and resistance, whether continuation or reversal patterns. Then I try to create my setup. Then the other part, which is the risk management part, that's risk management. That's another risk and money management. That's another area we're going to talk about later in the next future. So now, this is the way I view it. Now, the first one is, let's look at this EURUSD. I try to look at what is the trend. Now, it's an uptrend. The existing trend is an uptrend. What we are having is a correction within the trend, a pullback or a throwback in the right way. So we see it gets to this support point, back up, add a lower high, back again in the month of October to this same support point for the second time. And I remember on Wednesday or so, that was when we had this spike. And back again to this high. It slightly breached the high to this high, but around the same zone though. Today it attempted to break the high, but the market pushed it back. Remember your dollar index. We are seeing accumulation at the support. Now you will notice that we are seeing distribution at the resistance here. Buy at support, sell at resistance. So the daily time frame of EURUSD is saying that the sellers are coming back into the market. That's today. So what are we likely to see? In actual fact, EURUSD is trading within the range too. It doesn't have a trend, it's trading within the range. So we may likely see EURUSD trade within the range until there's a convincing breakout of this resistance and there's a convincing breakout of the support. So what we have to do is this is a daily time frame, and between this high and this low, you're talking about $140 something pips. So it's something you can trade. So EURUSD is trading within the range, so you trade within that range. Our bias is up for dollar, which means that a pair like EURUSD may likely be a down. Now, do we see a pattern? We've identified that we are in a range in this pair. The next thing is, do we see a pattern? Yes. It could be like a railway track, same body, but by 11 o'clock Nigerian time, we'll have an idea of what exact pattern do we have. So this could be a reversal pattern. So what would I do today, tomorrow? Like I said, I don't like going down to using multiple time frame analysis. I prefer to stick to one time frame. I'll form my bias around that, pick my entry and my exits around that, and trade it. Sometimes I can decide, okay, let me go to 1 hour to time it, but I don't like staying on the screen all the day, so I prefer to just do it this way. So what am I going to do by 11 o'clock when the market closes? But if I sleep, no problem. I'll wake up by 7, 8 Nigerian time tomorrow morning and place my trade, but I already have my bias formed. I'm taking a short position below 1828. I have my stop loss placed above the resistance. And my first level of take profit will be at 1.1690. And I want to see what the market will do around there. If it breaches it down, then I continue. And this is the major point. This is the major support that is critical in this range. So I want to see whether it's going to come here. But what I would do is this: by the time it gets to this point, I take out 50% of my trade, of the trade. I'm talking about trade management now. Shift my stop loss down to the entry. So I'm already one ratio 1-to-1, taking that off. Then let me see what it does here. But if tomorrow it goes against me, I'm ready to just lose out this point. So So I protected myself against unnecessary market volatility that could go against me. So this is my second setup, and this is what I will do tomorrow. My first trade setup. Now I made three. The first one is dollar index. I'm doing a buy tomorrow on dollar index. The second one is gold. I'm doing a sell tomorrow on gold. The third one is Euro USD. I'm doing a sell on Euro USD. Okay, let's take another interesting pair before I go to crypto. Then I open the floor for questions because I want this to be interactive a bit. Canadian dollar JPY, very interesting for me today. Very, very interesting. Why is it interesting? I've been following this pair for a long time, for a while now. Let me see. Did I have a plain chart? Okay, let me do a plain chart then. I've been following this pair for a while. I've been trading within some critical levels for this pair. First off, what is the trend? Bigger picture. The trend is down. We saw it from some support, cluster of support, went down up, came to this level. Now, this zone is a critical zone. It's a very, very important zone. Why? When we had a breakout, we have a gap breakout, gap. I think you can read up a little about gaps. We had gaps sometimes early in the year, and this pair breached some past support. After the gap, we've seen that at every time the market comes back to break this support or resistance that now becomes a support, you see accumulation, a buying pressure, a buying pressure, a buying pressure. What does that mean? It means that we may likely see a reversal in the trend, because at every time it comes to this place, 1, 2, 3, 4, 5, 6, 7, 8, the buyers tends to troop back into the market. So it gives me an insight that we are likely going to see a rise in this currency pair. So where and what are we supposed to do? Sometimes last week I took a buy trade here, and I exited early, very, very early when I saw this pattern. I was expecting a possible throwback or pullback down to this support, and I take a buy. But like I said, the market usually makes up its mind, and the market makes up its mind to break out above this resistance zone. So, but there's another important resistance zone here. Sorry, don't mind my drawing. I'm going to open the floor for the next few minutes, just don't mind my drawing. There's another important cluster of resistance zones here. And that was why we saw when the market spiked up today, this 81.43 became a profit-taking zone. Now, what am I expecting? I want to take a buy because I see a likely shoot up. Check all the Japanese yen pairs. You will realize that today, Japanese currency fell in value. USD Japanese yen, British pounds Japanese yen, Euro Japanese yen, Australian dollar Japanese yen, New Zealand dollar Japanese yen, they all fell in value. So there's a likelihood that we will see yen continuing to fall in value. So what am I expecting tomorrow? I'm expecting to take a buy, but I'm not going to take a buy at the close of today like I did for gold, like I'm going to do for gold, Euro USD, and dollar index. So what am I going to do? What I would do is I want to do what they call a buy limit at 80.58. So I want the price, the pair to pull back or throw back, because when it's down, it's pull back, when it's up, it's throw back. to 80.59, then take a buy. That's what I'm expecting. Then there's another thing I usually use to validate this historical resistance and support. I try to draw my Fibonacci because I love Fib, and I love to know what the market is doing. You understand? Hello? So now you would notice that if you look at the Fibonacci, the price actually breached 61.8 Fibonacci retracement level, which is 50.57. That is why this resistance point has been a key watch for me. So what am I expecting? I'm expecting to take a buy around here and exit at 78.40 with my stop slightly placed below it. Unlike what I had in gold and Euro USD and the dollar index itself, that I would buy at the close of the market today. But for this, I would do a buy limit. Let it retrace a bit, then take me a buy. Alternatively, there's another strategy I would use. So if I remember I've said I don't do multiple time frame analysis, but I have a system that I use to also time the market somehow. In a way, it's called a Bouvier system. So I would rather say, okay, let me take my buy when price goes back to test these moving averages and pushes back up. So I will wait for that. Let price come to test the moving averages, then I take my buy. Time will tell. They will be able to review this going forward. So this is the second one. My bias for Canadian dollar, Japanese yen is buy, but I don't want to buy at the close of the market. I want to use a strategy. I want it to come down to 80.59, 57 zone or 60 zone. Alternatively, I want to work with my moving averages. I want to trend down to moving average and I take a buy. So finally, quickly, let me quickly go down to crypto. This is another interesting crypto, Bitcoin. Okay, for the Bitcoiners, for those who do the coins, I don't do Bitcoin. That's the truth. But for those who do Bitcoin, let's look at it. Bullish bias for dollar. The expectation is that Bitcoin should retrace because for a while now we've seen it appreciate. It has strongly been trending up for weeks now. So what we may likely see going forward is this. The question now is, let us just do a bit. Is this a critical point? Is this level, is this a significant level for us to watch? Let's look at it. There's a way I look at, like I said, you determine the trend. The trend is up, but let's draw our key levels. Let's use Fibonacci extension. Let's try to use Fibonacci extension and see whether the current price at which it is trading is a significant level for it. I have not drawn it before, but I think it is. You will notice that this is the main uptrend. We saw this down, but it didn't get to this below. So, and the moment it breached this 100% at 13,821.97, price has gone down, gone to this Fibonacci level of 116.5 Fibonacci extension. This is a profit taking zone. So what do we expect? The dollar will rise. My expectation is that the coin should fall. But this will be termed as a correction. So my expectation is that we may likely see the coin come back to 13,821. Then we now see a bullish resumption. That is my thought. That's my idea on Bitcoin. Though I won't trade it though. I don't trade it. For those who knows me, I trade commodities, which is gold, sometimes silver. I trade currency pair. Maybe I will likely dive into it. There's another one I trade that is always very interesting. So finally. So I hope you understand this on Bitcoin. This is a profit taking zone. So there's a likelihood for us to see a downtrend in Bitcoin. But if peradventure it continues to trend up, there's nothing that that stops you from taking a buy. But this is a profit-taking zone. So if I were in this trade, I would exit my trade. I will exit it and wait for it to correct, then I take a buy. For us that likes bonds, you can trade bonds. So this is a euro bond. We'll see that euro bond also has trended down. So let me just end this down. I think I traded this once or twice. I usually trade this two times in a month. So for this, so we expect likely going to see a fall in the euro bond, a rise in the dollar, a fall in gold and related commodities like silver, a fall in euro USD, a rise in USD Swiss franc. So I've been able to, I think I've been able to explain a bit. But remember, my approach is very simple. I don't have a complicated approach. I've been trading for years. I've tried every indicator that you can think of, except for new ones that are coming up now. I won't say I know all, but I'm a certified technical analyst. So my life is technical analysis. But I try to make it very simple. Simplicity is key. My approach is very simple. What is the trend? Key levels, patterns around those key levels. Is there a setup? Take my trade if there is setup. Leave it if there is no setup. Then apply money management rules. So I think I'm done with that. For anyone who has one or two questions, you are free to just signify. Just raise up your hand. I will be glad to entertain one or two questions. I had to mute everyone. So, but I'll be glad to entertain one or two questions. Then we end it in the next few minutes. Okay, I have Rehoboth. So, okay, so Rehoboth, go ahead, please.
Okay, thank you very much, sir. This is my first time of your.
Hello, I'm with you. Rehoboth? Hello? Hello? Just, if anyone could hear me, please raise up your hand. Just
So
okay,
I want
okay.
to ask you, and as well, we watch some other.
I didn't get you. Please.
Okay, sorry. Network one. I'm new to your video. I just saw your link today. Then
Okay.
I just joined. So I want to ask you if you have a YouTube channel where we can go back and watch some of your previous videos. You understand? To learn more from you.
I can't hear you clearly, but I guess you're saying something about learning more from me, isn't it?
Yes, yes,
okay.
sir. I want to ask if you have a YouTube or anyhow to watch your previous videos.
Okay, to learn previous videos. Funny enough, this is the first time I would do a live video on trading. Normally I usually do my video, go to YouTube, search Trendonomics. I'll paste the link and everything for you to look at. And I will share my WhatsApp link where you could get one or two messages. But this is like the first time. You can just chat me up on my number, my private number, then I will send you one or two links to be through. Yes, you can definitely learn. The purpose of this is to share ideas and share market thoughts. So going forward, don't worry. I will try to do my best to share what I know and to empower traders. So, but chat me up. I don't think I have my link here, but you can chat me up anytime. And that. So I have another person, TPK. Let me unmute you. Please go ahead.
Good day, sir. Can you hear me, sir?
I can hear you clearly.
Good evening.
Good evening.
I want to ask you a question based on FIBO.
Okay, go ahead.
What are the major key major levels in that FIBO? The major levels that need to be considered while taking your trades on FIBO?
Okay. For Fibonacci, the key levels you need to look at when you have identified your trend and you want to trade in direction of the trend, you want to do what we call a trend resumption, trade in direction of the trend. And we also have the impulse waves and the corrective waves. Now, for you to trade in the direction of the trend, the most important levels for you to look at is 61.8, 50, and 38.2. When it gets to 50, it's a very significant point for you. Then you likely see a resumption in that. You notice that, let's look at this current instrument, which is Bitcoin. When we saw a rise in the Bitcoin to this level, it came to test 61.8. Then we saw a resumption in the uptrend. It didn't get to 50. So these levels are called retracement zones. So you may likely see price get to this, go up, price gets to 50, go up, price gets to 38.2, go up. But by the time it breached 38.2, it means it's a reversal. Now, that is for you to re-enter the market when you have established an existing trade. The question now is, when am I to exit the market? So over the years, I discovered that the market reacts around 116.5 and 127.2. This is my own customized level. And I've over the years tested and noticed it as always. So this is like a profit-taking point, the extension, the Fibonacci extension are profit-taking zones. So you may likely see market take profit from this level. Market participants take profit from this level and continue to trend down. And you will notice for all my analysis so far, I hardly find one that I don't use Fibo. I hardly find one that I don't use Fibonacci, because I try to use that to determine my key levels. My gold has Fibo, my EU has Fibo, my my British pounds USD has Fibo. So I have an idea of what British pounds USD is doing today. So I won't even trade it. Even when I'm in an uptrend, if I'm in a buy, I know that today I'm supposed to exit the market because I'm not sure what it's going to do tomorrow. So I want tomorrow to justify itself. So these are key levels though, and these are what you can work with.
Okay. Please, sir, I have another question to ask you, please.
Go ahead.
Okay. Like, if you are a scalper in this forex trading, sir, what time frame is better for you to be using to scalp?
Yeah, for scalping, I know there's 1 minute, 5 minutes, and the rest. Like I said earlier in my brief introduction when I started, I've run through a lot of them. Scalping, I've been a swing trader, and I've done position trading, which is intraday trading. And research has shown that the real profitable trader over the long term are position traders. Yes, scalping could be good. You take more, but I don't encourage scalping. I don't let the market make up its mind. Trade in the direction of the market. If you miss an opportunity now, doesn't mean that you won't see tomorrow. You won't see another one next time. Like I said, trading is a marathon, not a sprint. I explained something earlier today. Now, for some traders, I was like, I would have taken a buy myself from being good at this point, but I decided I want to wait to be sure that the market has really made up its mind. That is why I'm waiting for the market to close in gold today. I don't mind the 1,000 pips that it has gone down. I don't mind. You may decide to want to scalp. There are a lot of strategy out there that are scalping, but I don't encourage it. Even for risk management reasons, your trade management, you may do more trades. At the end of the day, you discover that you are losing more and you're not even gaining more, you're losing more. So that's my idea of scalping. But you can go 1 minute, 5 minutes if you want. I've traded 5 minutes before. I never did 1 minute, but I've traded 5 minutes before. But let me be sincere with you and truthful. I've never been profitable using 5 minutes. So I rather decide to stick with what I know, which is a longer time frame approach. The least time frame I go to is 4 hours. The least, and why? Because I have a strategy I apply to 4 hours. Very interesting strategy. This is just a simple strategy. No headache, no. If I want to do intraday trading, I want to swing trade and trade I want to use a swing trading approach. I go to 4 hours. I use this strategy. Works best for me. So, any other one? Question. I hope I'm able to answer your question.
Yes, yes, sir. Yes, sir.
So,
Okay.
any other
Do you
question?
trade indices?
Yes, I do. I do. Let me show you.
There is one move that happened in indices today.
Yeah, I get. Today, what we had was we saw a spike across board today. Across board
Yes.
today, and the reason is very simple: the COVID-19 news
Yes.
resulted to that.
Trump. Yeah.
So that's why we
Trump
saw
released a new.
those moves today. So that's what we saw. I have another meeting in the next 5 minutes, so I would. For anyone that has one or two messages, please, you can just join our WhatsApp group. If you don't have the WhatsApp link, just private chat me. I'll send a link to you. Subsequently, we would improve.
But
I would improve in my delivery of this lecture. Don't mind me. This is the first time. I always enjoy doing my thing my way. But let's quickly look at the indices before we just zoom out today. So this is
okay,
done.
please, sir. After your lecture, can you drop your number in that message
I've
box?
already dropped my number, so you can chat me up anytime. For those who trade Dow Jones, I do bond. I do a bit of. Sometimes I just dive into ETFs once in a while because I'm a technical analyst. So let's look at this XMP. I hope you can see something that's happening now. We saw a spike up, but today the market is about closing strongly bearish. Like giving us a reversal pattern at a resistance. So a lot of things around this. Okay, so any question, any more question? The WhatsApp link, I don't have it here, but what I will do is, can you chat me up on my private line? I would send that to you, but subsequently, I will always want to do this probably twice in a week. We'll look at market, we share ideas, we share thoughts. There will be a time I'll just open the floor for one or two people to just give us their thoughts about the market. But for now, just take it as the first time and we're going to improve going forward. I hope I've been able to meet your expectation. Please, if I have been able to meet your expectation, just give me a thumbs up so I know that yes, you don't waste your time for joining. I just need a thumbs up to be sure that I'm able to meet one of your expectation at least. I just need a thumbs up to show that yes, I've been able to meet it and I know that I'm satisfied. I'm able to deliver something to you. But remember, simplicity is key in trading. Determine your trend, determine your key levels, find your pattern around those key levels, look whether there's a setup around those key levels with this pattern, then trade in direction of the trend. You can trade within a range over a long time, not a range of 1 minute, 5 minutes, 2 minutes. Thank you very much. I really appreciate you for coming online. I would post this video on my YouTube, which I will share, YouTube page, which I will share on the WhatsApp link. If you don't have my number, kindly copy it, and then going forward, we'll be able to. My number is 0909-2133-294. 0909-2133-294. Thank you. I appreciate you. And have a nice night. Be a profitable trader. Remember, trading is a marathon, not a sprint. Thank you. God bless you. Good night.